So when you see titles like this where a housing drought is definitely coming, yeah, it's 100% coming. The question right now is, when is that coming? Because you could be right on your prediction, but it's just if your timing is off, that throws off the whole prediction. And I can tell you every single month when this data comes in, we're going to see more and more headlines like this where, hey, we're not selling enough properties. Hey, we're not building enough properties. We're going to have a supply problem in the future. But currently in the resale market, when you have 30,000 unsold properties and you have a boatload of properties coming down the pipeline over 50,000, we don't have a drought in housing right now. All of this inventory needs to get absorbed before we have this drought. Now, are people going to try to time the bottom before this drought appears? 100%. And this is why I'm trying to provide a lot of context and data for people who are trying to do this. Because we know from the pre-construction condo side, if you have prices in the $600 a square foot, you have biters. Toronto just flunked its housing report card. New builds are drying up and the pipeline is thin. I'll show you where the shortage hit and the exact moves to get ahead. And be sure to stick around for the area by area breakdown to just see how your neighborhood has fared on this report card. Stay tuned. Hi, my name is Zen, and if you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe. There's a new report from the Missing Middle Initiative that has given Toronto and a bunch of other cities in the Southern Ontario a failing grade when it comes to building new homes. So you can see right now over here, they're saying that in the first half of the year, Toronto has roughly 67% behind on their housing targets set by the provincial government. So Toronto is building slower than the previous year when it was already very slow, which means that there is going to be a shortfall of homes at some way, shape, or form. Now, depending on obviously whether it's a low-rise home, which takes anywhere between 18 months to build, or like a high-rise, which could take 5 to 6 years, the impacts on the actual housing market could be delayed or it could be as fast as 18 months. And in this report, they're saying that unless the government takes action by lowering the tax burden and making things faster, it could be a very catastrophic thing for our economy because 8% of the GDP in Canada does come from construction. So if you have no housing starts and there's not many construction jobs, that means that we're going to have a recession, which will likely happen at some way, shape, or form. So when we dive deeper into this report, there's a couple charts I kind of want to show you. The first one being how the entire Toronto CMA, which is a stats can definition of Toronto, which includes all of these cities that you're looking in front of you, which let's just loosely call it GTA. And you can see over here, most of the cities have been given an F on this side over here, with the exception of Markham, Milton, Pickering, and Richmond Hill. Now, I can tell you for a fact why these cities did not get an F, because Markham has a whole swath of land off the 404 that they're building a lot of homes for right now. But the problem is most of the detached homes there are $2 million plus. You have Milton, which generally Mattamy owns most of, and they've been building a lot of homes there. And they filled in a really big chunk of it. And because it's Mattamy and they want to continue to keep the machine going, they have dropped some prices on a lot of those new build homes in Milton because they own so much of the land. And then in Pickering, you have the stuff that's north of the 407, which they are also building, and Mattamy is also part of that side. And then you got Richmond Hill, where there's a bunch of stuff coming up along Leslie and Yonge. But outside of that, I don't think any other city is building that much really right now because there's just no demand for this type of product. Now, one of the things you'll notice is most of these areas outside of, say, Richmond Hill and Markham, they're actually building homes that are low rise right now. And there is somewhat of a demand for these new built homes because they're low rise. And you can kind of see this in the chart that they have over here. So your ground oriented homes, which would be, call it your stacked townhomes, your townhomes, your semis, your detached, you can see that we're building less and less of them in the last few years. Obviously, we had a ramp up of it when the market got good, but now that the market is not as strong, there's obviously less and less of them. And the thing I can tell you about a lot of these projects is these giant subdivisions that get built are generally owned by billion-dollar real estate families, and they can sit on the land or land bank for as long as possible. So unless the market is kind of in their favor to sell, they're just going to sit on it because it doesn't cost them as much to service it, knowing that what the profits on it can be because they have decade-long horizons. Now, when you look at the condo over here, you can see there's a very big drop off, and that's mainly because there are no pre-construction sales right now because condos were catered towards investors, and investors are out of the market now given what's happening in the real estate market. So not many end users are buying these condos, which means pre-constructions have plummeted, which means that housing starts have also plummeted. Whereas when you look at ground-based oriented properties, because they take somewhere between 12 months to 18 months to build, there is still enough people buying these, call it family homes that are 3-bedroom plus, and they're actually moving in afterwards because they can wait that shorter duration to build. Whereas at the condo, you're 5-6 years out, generally investors are kind of the only ones buying. And then you also have your rental apartment, which is what I've been saying for some time, where larger institutional money is coming in and using a favorable financing from CMHC called MLI Select to create a lot of these rental supply. So we're going to see a lot of this supply come forth, but because the economics are not great, you can see that it's slowing down as well right now. And this is why there's a lot of people in the building industry saying that there could be a drought that is coming right now because very little new product is actually selling right now. You can see over here, last month, only 300 new homes of any kind were sold in all over GTA, which is very, very low. It's normally supposed to be at 1,500, so we're at 20% of that. So it's very, very low. And this is why when I look at the other chart, you can see that the housing starts have dropped down because you need sales to actually have starts. And you can see over here, sales were very, very strong in 2021, being the pink side being ground oriented, so your family homes, and then you have the condos in the gray. And then 2022 was fine up until the interest rate hike. And then you had some couple other things trickle down, but now you can see that we're going down, 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 down. We're not even getting close to a few thousand a year. So that is going to prove to be a problem for the construction pipeline. Quick sidebar, if you're buying but not sure where to start or what's even a good deal, just hit the link in the description below. Tell me what you're looking at and I'll break it all down for you. No fluff, no BS, just real talk from a human and not just another chatbot. But the problem with this drought is that it's not coming anytime soon. Because I've been saying in the last few videos, we have a surplus of inventory in the resale market right now. 30,000 units haven't been absorbed. And this is a chart that I've shown many times before, where we're seeing right now that a ton of inventory is going to be completing. But basically after, say, 2029, when a lot of the sales, if they were happening right now for high rises like apartments, condo apartments, or rental buildings, that supply is going to be dwindling and it's going to be next to nothing come 2029. So if the inventory says get absorbed in the next 5 years, then there's a high probability we will have a supply crisis. But right now, because we're still having a lot of completions, the pipeline is just drying up. This is a problem for Toronto in 5 years. Because in this article, they argue that the benchmark price for a new condo, so like a pre-construction condo right now, is $1 million, which is true. I have actually looked at the data from Build, and they're indicating that in order for you to afford this, you need almost a $200,000 income to cover it. And while yes, that is true, no one's really buying $1 million condo right now as their first home. And even if they are buying $1 million condo as their first home, they're not going to be leveraging it at 80% where they need this high of an income to service that debt. Because that $1 million property is generally a larger unit right now that call it is supposed to be for families, but realistically, developers have not been building suitable family-oriented housing in quite some time. A lot of them are building smaller condos because that's what people are buying, and by people, I meant investors. But because investors have basically backed off right now, they're not in the market as much, so a lot of this product is sitting. However, I did talk about last week where a developer dropped their prices for a Oakville condo from $1,100 a foot all the way down to $680. And I can tell you right now, they have sold out. So this was the prices I was showing you, and there's about 30 units here that will likely post in the next set of data when the month kind of ends. And this is to illustrate to you, yes, even though there's no activity right now in the pre-construction market, it's to show you that if you drop the prices enough, the investors will come back. You can see over here, you just need to drop the prices by 40%. So whether that comes out of taxes or deflation on construction, or they remove the red tape so things can build faster so the carry cost is along, some way, shape, or form, if the total cost can be dropped down to what we saw over here at the post condo, there obviously will be some kind of investor activity. It's just right now the prices don't make any sense. So when you see titles like this where a housing drought is definitely coming, yeah, it's 100% coming. The question right now is when is that coming? Because you could be right on your prediction, but it's just if your timing is off, that throws off the whole prediction. There's a saying that goes, a broken clock is still right 2 times a day, and this is the truth for this case. And I can tell you every single month when this data comes in, we're going to see more and more headlines like this where, hey, we're not selling enough properties, hey, we're not building enough properties, we're going to have a supply problem in the future. But currently in the resale market, when you have 30,000 unsold properties and you have a boatload of properties coming down the pipeline over 50,000, we don't have a drought in housing right now. All of this inventory needs to get absorbed before we have this drought. Now, are people going to try to time the bottom before this drought appears? 100%. And this is why I'm trying to provide a lot of context and data for people who are trying to do this. Because we know from the pre-construction condo side, if you have prices in the $600 a square foot, you have biters. And when I look at the low-rise 3-bedroom like family-style units, I'm looking at this project to see if it actually sells out because they're starting at $700,000 for 1,200 square feet in Vaughan at Major Mac and Bathurst. And if we see there's an increased amount of sales at these price points for these new build projects, we know where the floor is because people have jumped back in. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, but decades of experience to work for you. So when we're seeing pre-construction prices come down, it means the builders are adjusting. And when we see inventory this high, it means that the sellers have to adjust for buyers to get into the market. So let me give you my take on what inventory I need to see before I start seeing prices, meaning the average prices, maybe even stop going down and maybe start going up. So right now we are at 30,000. And this is why whenever I reference this chart, I want to see our active listings in this band over here. And until we reach there, I don't think we're going to see prices increasing. And this is why I keep talking about inventory in the last few months, because inventory is the best indicator for where prices are going to go in the next few months. So this drought is obviously going to come at some way, shape, or form, but it's not a problem for us right now. But that doesn't mean that if you're trying to buy a home right now, you should be waiting on the sidelines, because if you're actually going to live in this property, call it you want to move because you're starting a family, you're getting married, your kids got to go to a certain school district, now is actually a good time to make that move because this is the most amount of choices that we've ever had. And it's even a better move if you can find some of these distressed sellers and buy at prices back in 2018, 2017, 2019, because that's exactly what we're seeing right now if you can find the right seller. And this is exactly what I talk about in this video. So I'll see you then. Until next time, your move, your future. See ya.